The timing is uncertain, but we do think the president wants this, the industry on board for the midterms. We think he needs the youth vote, and certainly he could use a W. Not to mention, this was a promise that he made, and he likes to say promises kept. So that's the bull case. If and when we see it, how does that impact Ascend? We talked about the torque. We're long the stock. We think it has more torque than most, but tell us why.
I mean, for rescheduling the part, I mean, one of the things I'm most excited about is just a reevaluation, opportunity for the whole industry. I feel like Ascend in particular is undervalued, despite the fact that we have an extremely strong balance sheet with $87 million in cash at the end of Q3, no debt due until 2029. We recently completed a traditional mortgage at 8.5%, competitive interest rate. We achieved the $30 million plus in cost cutting. We have this large scale densification initiative in front of us, especially the margin and vertical opportunity that comes with densification. We've proven our ability to, cut cost and be disciplined. And, and then operational excellence, I think, is starting to permeate from what we've achieved. Yet Ascend trades at one of the lowest multiples relative to the rest of the sector. And we don't believe a company with a strong balance sheet, operating cash flows, industry-wide leadership metrics in retail and CPG, plentiful opportunities to reinvest that cash inside our core markets with incredible ROIs, should be trading at one of the lowest multiples in the cannabis sector. There's a clear valuation discrepancy. And that actually led us to aggressively buy back our shares since December of last year. We've purchased and canceled 15 million shares to date, which is 7% of our outstanding shares at an average price of 30 cents a share. And we continue to evaluate what's the best use of cash at all times. And M&A right now actually seems like a potential fulcrum opportunity for us, because there are a lot of attractive assets for sale in our key markets, and those represent an outside accretive ROI opportunity to reinvest in our business. So, that would significantly, that would help us significantly increase our dispensary count and should lead to better capacity utilization and provide operating leverage, which should improve margins and operating cash flow, all the things I've been talking about. So it's super exciting to see these opportunities, in front of us. And then on top of that, on top of the revaluation opportunity, you look forward to all the other things that rescheduling could bring. Number one is just clearing the unfair 280E tax burden, normalizing, capital markets for cannabis, allowing better cost of capital, more traditional financing options, potential uplisting, and, potential for customers to finally use credit cards. Customers can't use credit cards right now. We've seen in some test cases that customers spend 20% more when they have the ability to use their credit card. So I'm excited to see what that can do for the business. And I think all these factors would increase our ability to expand our business organically and inorganically. But I mean, the last point I would talk about is really, what you mentioned, which is this closing of the intoxicating hemp loophole, which could have some significant implications for the industry. It's estimated that it's a $20 to $30 billion total available market. So the TAM is $20 to $30 billion. It competes directly with the regulated market, but it competes with a significant advantage because it's unregulated. They could cross state lines, so you can get those economies of scale that we all wish we had in the regulated industry, and they can accept credit cards. So this new legislation, which it's currently not going to go into effect for another year, so we'll see if it ends up actually being what it is or what it looked like in that bill. But a full ban or a partial ban, if any of those things were to take effect in any way, it would significantly increase that TAM that I talked about for regulated operators. And I think it will help alleviate many of those pricing pressures and, sector, the real competitive, like downward pressures that we're all feeling. And I'm very excited about that prospect.